available indicators, the Bahamian economy continued to expand during the first 6 months of 2025, but at a slightly moderated speed compared to 2024. This mainly corresponded to more subdued growth in tourism. Otherwise, the economy benefited from sustained foreign investment activity and increased stimulus from private sector credit. The environment is projected to have provided ongoing gains to employment and increased taxable activities which benefited the government's revenue collection. Stronger credit expansion resulted in reduced seasonal growth in bank liquidity and in external reserves compared to the first half of 2024. Credit risk indicators were also comparatively lowered from 2024, but at a more gradual speed given the tempered pace at which the economy improved. Meanwhile, the inflation rate slowed significantly compared to a year ago due to subsided energy prices and tempered increases in average cost on other imported goods and services. Foreign exchange market indicators attest to the slower growth in productive activities over the first half of the year. In particular, commercial banks' purchases of foreign currency from the private sector, which are correlated with tourism, investment, and other activities, rose by 1.3% during January to June 2025 as compared to by 2.2% in the first half of 2024. In contrast, sales of foreign currency, in part stimulated by bank lending, expanded by just over 4%, as opposed to a reduction of just over 2% in the same 6 months last year. This highlighted increased private sector demand on both imported goods and services, with lesser amounts paid for fuel imports and travel. As to tourism, the continued gains reflected a combination of a subdued expansion in stopover receipts compared to a steady and healthy increase in cruise visitor earnings. In the stopover segment, where the bulk of the industry's receipts were recorded, inflows were boosted because of higher average pricing, despite a slightly reduced number of visitors. The vacation rental segment contributed notably with an expanded listing of properties supporting a nearly 10% increase in average room sales and further appreciation in average nightly room rates occurring alongside the room sales increase. Challenges overall, though, reflected constrained hotel room inventory and increased uncertainty in the U.S. markets, which accounts for the majority of the visitors. As regards the investment climate, indications are that activities continue to be paced by foreign inflows into cruise destination developments, small and medium scale resort developments, and residential real estate. In addition, strengthened commercial bank lending provided further support to local construction activities via mortgage activities. Returning to the foreign exchange market trends and the outcomes for the external reserves, there was a moderate reduction in the net amount of foreign exchange that commercial banks retained from the private sector and sold to the central bank over the first half of the year. In addition, the central bank made a net sale of foreign currency to the government and public enterprises over this period, as opposed to a net purchase of foreign exchange from these entities last year. So correspondingly, we noted that the seasonal growth in external reserves over the first half of the year was more than 1/3 lower than in the first half of 2024. As we neared the end of July 2025, external reserves were estimated at $2.95 billion, which was almost about 2% lower than at the same point in 2024, when the outcome had benefited from comparatively healthier tourism growth and some net receipt from the government's external borrowing activities. Summarizing credit trends, domestic banks lending to the private sector strengthened in comparison to 2024, with increased financing broadly across consumer loans, mortgages, and commercial activities. Likewise, credit risk was further reduced compared to 2024. In particular, the share of private sector loans that were 3 months or more behind in payments was about 5% in June 2025, compared to around about 6% in 2024. Again, though, as the pace of economic improvement reach a more sustainable or steady level, delinquency indicators showed only marginal abatement from the beginning of this year. Most of the year-over-year reduction in the non-performing loan rates occurred during the July to December of 2024 period, as opposed to the January to June period of this year, and that period encompassed more or less the year-over-year period for which we're making comparisons. So turning to the outlook, the central bank continues to expect the economy to grow at a slower pace in 2025 than in 2024. Tourism, as the main engine of growth, is likely to show mixed trends, in particular with the slowest results being in the U.S. stopover components relative to more sustained expansion in vacation rental receipts, non-U.S. stopovers, and returns from the cruise segment. Despite the contrast, though, between performance in hotels versus vacation rentals, the central bank's analysis of online travel sites and forward-looking bookings and pricing data forecasts better hotel sector revenues over the remainder of this year as compared to the second half of last year. And the results last year, should be noted, were impacted by greater uncertainties around the potential outcome in the U.S. presidential elections, as well as disruptions from a relatively busy start to the 2024 hurricane season. So those factors are not present or in terms of gauging the consumer sentiments going into the second half of the year. Nevertheless, the forecast of improved earnings really focus only on the likely improvement in average room rates in the sector, without any forecasted uptick in occupancy compared to the same period in 2024. The foreign investment climate is also expected to be stable, and along with tourism, continue to generate growth in the employment headcount. Added to a maintained stronger rate of credit expansion, these trends forecast some possible reduction in bank liquidity and in external reserves, but they offer favorable conditions for improvement in the government's fiscal position. As we observed from earlier in the year, there are still increased headwinds facing the economy, but these do not extinguish the growth forecast. Uncertainties from increased tariffs on global trade are expected to slow global growth below what would have otherwise been its potential, and this will continue to be a drag on tourism. Any escalation of trade tensions would add to the economic strain of the ongoing wars in the Middle East and Europe. In the meantime, tariffs, supply chain disruption, and the potential diversion of trade are collectively channels for increased inflation, which could postpone any anticipated further reduction in international interest rates. And this would keep both public sector debt costlier than it would otherwise have been, and it would constrain the ease of funding for foreign direct investment, on which our economy depends heavily. Given the outlook, the central bank will maintain accommodation towards stronger domestic credit expansion, closely monitoring credit risk indicators and the sustainability of foreign exchange market trends to promote stability of both the currency and the domestic financial sector. Questions?
Yeah, good morning. Have you seen any easing of inflation and cost of living? And how have the tariffs affected or had any impact in terms of our economy on prices and I guess, imports in our economy, or have we not seen that trickle effect yet?
We have not seen any cumulative effect yet of trade policy on prices. A lot of the developments in that space have been taking place since the beginning of this year. When we look at the inflation trend in our analysis, we're still taking a 12-month period into account. And so that's taking the middle portion of 2024 compared to where we are in 2025, or heading into just before the the midpoint of 2025, and over that period, on average, based upon the data that the Statistical Institute has compiled, average prices decreased for the Bahamas. So the inflation rate was negative in the most recent data that we've seen, and that reflects the fact that cumulatively there was still pass-through benefit from some of the relative reduction in the components that have energy as part of those estimates, whether it's transportation, some parts of the housing, because housing is where you would track the average cost in electricity, not the aggregate related to consumption, but the average relative to the pricing. And you would also see in the index also related to fuel, the direct expenses or costs related to fuel for automobiles and the like. So in terms of the 12-month period, the latest 12-month period for which we are comparing, the inflation rate was negative, which is equivalent to saying that the average price level was slightly lower.
I guess since you brought up energy, what effect do you think the increase that we've seen in BPL rates to have on economic activity, and especially as it turns to resorts, and they're having, some of them have said lower bookings, but now increased fees?
Well, energy is a very important cost component for business on the whole in the Bahamas. Aside from just what we might be experiencing in the very, very near term in terms of some of the fluctuation, what is important is the kinds of reforms that are putting us on track to lower the average pricing for energy. Now you have to add to that pricing is one of the elements. We also have to put increased attention on the level of energy that is being consumed, separate and apart from what we're paying on a per unit basis. And there too, I think we need to have, continued conversation and dialogue around energy efficient appliances and other items that relate to how much energy we're using.
Morning. Governor, you mentioned, and I think you had noted this before, but the stopover arrivals slow down. How concerning is that from your perspective?
I think we have a good appreciation for, the fact that some of the ability to grow stopover depends on the inventory for accommodation. And in that respect, to address the marketing upside potential for stopover, you also have to focus on how we grow the inventory. And there is a recognition of that. And what we should also recognize too, in terms of the way the pattern of arrivals are concerned, is that sometimes you may have a period during the middle of the week when occupancy levels are low. And so if the visitor vacation pattern is concentrated around the weekend or just a few days out of the week, then it's the occupancy potential within that period that is more likely impacting our results than the fact that you have, periods during a week or a month where the occupancy levels may be lower on average. So growing the inventory is important, and you do see the incredible response in terms of the amount of vacation rental units that are still being added to the accommodation stock, and that is being backed up by increased sales in that space.
Well, the yachting sector said that they've been losing millions of dollars recently. Can you kind of confirm those numbers when we talk about charter guests and tourism?
No, we can't. We don't see the data as clearly in terms of what's happening in that sector. But I can say that in general, our focus and emphasis is getting better data and information on all of the sectors. If any of those activities is having an impact in the Bahamas, that impact is going to be noticeable. If they're using Bahamians or Bahamian inputs on any level to support their activities, because then it translates into funds that are deposited into the commercial banks, and it shows up in the foreign exchange purchases and sales that we observe, and it would also show up in the imports that the customs officials record. So we know from those indicators that we can sometimes get a good feel from what's happening. Improving the data now helps to better connect the dots as to why we are observing what we see in the foreign currency flows and in the import numbers.
A recent IMF report had raised some concerns about the accuracy of the statistical information, namely with arrivals in the tourism sector and the way that we would track that data. What do you think of those concerns, and what is central bank doing or is doing in order to improve accuracy when it comes to recording those numbers?
I will say this, so that everyone's minds can be at ease. The tourism sector in the Bahamas is the lowest hanging fruit in terms of improving data that describes this economy. Our greater challenge, and that we continue to work with all of the stakeholders to get better data on tourism, to understand not just what the stopovers are spending, we're working to get a better feel for the cruise impact and the vacation rental impact, because at a minimum, we can tell whether there's activity that should be better reflected in the government's revenue intake. But beyond that, we also need to improve the estimate of what's happening in the rest of the Bahamian private sector, because that too is important. And there's a greater challenge because those two depend on the kinds of surveys and responses we get from the private sector. So it's not just about tourism. As a matter of fact, when the central bank looks at its trade and external sector statistics, we look at how we can better estimate the size of the investment or capital stock in the Bahamas, how much of it is owned by non-Bahamians, and we also have an assignment to estimate better the size of the capital stock that Bahamians owned abroad, because all of those tend to be reflected or should be reflected in terms of how we represent our economy, how we communicate the size of our economy to foreign investors and to the outside world. So even though there is a lot of attention on dimension to tourism, the technical assistance that the IMF provided was holistically focused on how we could improve in general how we estimate the trade statistics, including the Bahamian private sector. And one of those areas is also what's happening in terms of real estate transactions. So we've already scoped how we're going to improve those kinds of estimates.
I noted, I think one of the digital payment providers had done a report recently, and I saw something else on the web about the take-up of the sound business. And I was just wondering, overall, since its introduction, are you pleased with the take-up, and what more is being perhaps done to, I guess, encourage more adoption?
The issue of adoption is not just an issue of sand dollar adoption. There are some elements that we have to continue to work on to improve the ease of access to digital currency in terms of the business environment, as well as how people get funds in digital wallets. But more important than that, insofar as we are concerned in the Bahamas, there is a need for a greater push for the use of digital payments on the whole. And that, I think, some of what we've done in terms of the role of sand dollar has improved the central bank capacity to tackle those issues. It has improved the central bank's understanding of the landscape, and we feel that as we we address those, we are going to see results. We also believe that it's important that whatever the results is that we achieve, they're reflected in the family islands, particularly in those remote island communities, because a lot of the logistical challenges that summarize as financial inclusion access tend to concentrate in those remote communities. And so we're also focused on how we can break through the challenges in those communities so that we can get more traction.
Yes, speaking on that, agency banking, you guys said released a paper for consultation a while ago. How is that process going? What's been the feedback? And I guess how is that going to help in with your efforts to improve inclusivity and make sure that even the more remote islands have access to banking services?
Well, okay. Well, let me first back up and back to the first question, which relates to digital payments adoption. We've given ourselves a target in the next 2 years to transition the Bahamas to fast payments, which means, in the simplest way of translating it, that the population more universally are using their smartphones and other technologies to send and receive payments in real times across the digital wallet space and the bank deposit space. So we think from a revolutionary perspective, that is going to accelerate the digital currency use as well as other digital payments use, because it's going to push all of our financial institutions in the space of providing the mobile apps for peer-to-peer and P2B business transactions. Now, insofar as agency banking is concerned, those sort of preparations support what we would like to see in the agency banking space. So we've just completed the public consultation, so we're going through the feedback, very constructive, and that's going to help us make any sort of tweaks that we need to make in terms of the framework. And it is expected that agency banking will make it easier for financial institutions to have contact points with customers, particularly in the remote communities, but it is still going to be the most impactful when it is paired with all of the other improvements in our digital infrastructure, because still we're going to have to deal with the efficiency of providing services overall, as well as the resiliency of the infrastructure and the platforms that services are provided through.
I guess since we're still talking about digital stuff, I know there was some time that you were looking at, I think it was like a regional cross-border payment solution with
AfriExim Bank.
Yeah. So how is that going, and how is that developing now, I guess?
We're still organizing ourselves in terms of how we execute at a pilot level, but the intention would be that the Bahamas, along with several of the other Caribbean countries, would set up an infrastructure where their locals can send funds directly between themselves, and those funds would be routed and settled within a facility that the central banks maintain with the help of AfriExim Bank. And it would mean as well that those payments are not reliant on the traditional correspondent banking channels through which payments are being routed now to reach a lot of these countries. And it's anticipated that if you can make a lot more of those direct payments in a multilateral setting, countries can at least reduce the gross volume of certain foreign exchange that they need for payments. But we anticipate that the Bahamas, along with several of the other countries, will work together. And in the Bahamas case, it offers the potential for any of our financial institutions, because ultimately to do those types of tests, it will involve the financial institutions in the respective countries, including in the Bahamian case, some of our digital wallet providers All that would be required is that you have the equivalent of individuals and businesses in the other countries that are on the receiving or sending end of payments. No other questions?
Yes, last one, I guess. Any updates on the credit bureau? Because since it's been implemented and going on, and a lot of agencies were signing up, so how is that going with the credit bureau?
The Credit Bureau has made good progress in terms of its early stages of operations. The banks particularly are at the forefront in terms of providing information and making use of the Credit Bureau information. So from that point of view, I think financial institutions are still going through the process as to how they fine-tune their use of that information, because it is important that they still calibrate what they're receiving out of the Credit Bureau to what the environment is like in the Bahamas. But it has been a very satisfactory start. There are still some groups, sectors and groups where continued work is being done to bring them into the reporting framework for the Credit Bureau. But the commercial banks and the credit unions in particular, we know that we've made good progress in that area. And there's been a focus on getting some of the non-banks and non-credit unions to begin to provide information to the Credit Bureau. That would include a lot of those licensed money lenders and other types of entities.
How far away would you say that we are from having a financial system where people would know their credit rating, their credit scores, and it would be, used as something, as kind of a measure of your credit worthiness? Well,
The beautiful thing, given the strides that the Credit Bureau has already achieved, any of us that has dealings with the banks should be able to make an inquiry to the Credit Bureau and see what information there is that they have on us. So that's already a possibility, and it's going to improve as more of our transactions get reflected in the Credit Bureau data. Okay. All right, well, thank you all very much. Pleasure as always, and please write in with questions if you have any.